The decision for interest rates are in. A hawkish Fed pause can have both positive and negative implications for risk assets. But what happens if a particular asset has the ability to decouple from broader market influence? Welcome back to the channel on this Hump Day Wednesday. This is ARCa, and let's dive into ticker symbol FNGR. Let's kill 'em, team. What is up, you guys? Thank you so much for stopping by once again. Let's dive in to ticker symbol FNGR. We're going to start off first with the China ETF versus the FNGR asset. Okay, so sorry that my voice is a little bit raspy, right? I've been having some long space calls, some long, live streams and stuff. So I feel a little, I don't know, like my voice is kind of giving in a bit, right? I'm going to have to take some herbal tea or something. But anyway, yeah, so check this out. This is the iShares China ETF, right? And we're noticing here that there has been some correlation between FNGR and the CNYA. Why? Because of the China Unicom and China Mobile networks, right, that are paired as clients to FNGR. So this is likely why we're facing some pressures alongside China, right? So that paired with a hawkish Fed pause, it called for a pretty interesting downside, to say the very least, right? So right now, I think price action right now is currently sitting at 501 at market close, and I'm speaking about the after hours trading right now. Let me clear my throat just a sec. Pardon me. Okay, so yeah. So I just wanted to point out that we should be keeping an eye on the Chinese ETF here, because this is showing some deep correlation now with the FNGR asset. So, team, I'm going to be honest, this is going to be a real thread here. So if you have something to grab, go to the restroom, grab a snack or something, because this is going to be a good one. I have plenty of things to talk to you about. Okay, so next one. This is a very important topic here. This, what you're observing here is an indicator that's actually giving us the macroeconomic data releases, so you can enable whichever one you want simply by selecting which which one was it? It was this one right here. Sorry. Let me go ahead and just get rid of this. It's called the economic calendar events, right? So you can select which event you want, or which one you don't, right? So in this case, this is the FOMC, and we kept this one in because the FOMC was today. Right, so I backtested here, not backtested the upside thrust or down, or drawdown or nothing like that. It's simply by upside versus downside FOMC meeting. Okay, so it's just the probabilities based on however many times there have been FOMC meets since January 2022 to present day, and which ones have faced an upside or which ones have faced a downside. So, what you're noticing here is that there have been 13 total iterations, since January 2022 to present day, and 8 of those iterations have been actually, I don't want to say correct, they've just been downside, right? So this was a downside back test, because today was a downside. So that gives us a 61.538% probability that today would have been a downside. Of course, we can't, it's hard to guess or try to analyze what the Fed is going to say, especially, Jerome Powell is reactive to the data as it comes in, right? So this is a back test based outside of macroeconomic, catalysts, right? In this case, it's just the upside versus the downside. And we had a 61.5% probability that we would drop today, right? So what that leads me to is this. So this is the back test that we did of the triple witching or quad witching, that just happened on Friday. So I started to measure I started to put down or to plot whatever the Fed did upon that FOMC meet in relation to the quad witching events. So this particular one here The Fed released. Let's see, that was right back here, and that was on the date here was September 21st, 2022. That's when the FOMC came in and gave us a 75 bip rate hike. Right now, this price action capitulated, and then we started a massive run to the upside. Right, so I plotted that here. And we don't really need to know this here, but it was just it was a 19% drop. But moving on to the next one here, this is the quad witching from Friday, March 10th, and moving on to, let's see, March 22nd. This is when we got the FOMC meet to announce a 25 bip rate increase. So what I'm saying here is that with these rate hikes, we got an upside, right? And this is another upside here based on the rate hike. But remember that this is the correlation or the pair between the triple witching and the FOMC, right? So, and now this one here, this iteration came in on Wednesday, June 14th, 2023, and we got a hawkish pause, right? So they did not change the rate hike, but they did warn us about potential rate hikes coming in. And we got an upside from that as well, right? So Friday, June 9th, that was when the quad witching ended on the red day, of course. We got a recovery coming in on Monday. Tuesday was a red day. So it's quite inverse to what's happening with us, right? So we ended up getting Friday witching, right? The Friday that just passed, Monday red day, and Tuesday green day, right? So in this case, it was just inverse, right? So we have that Monday green day and Tuesday red day, and then followed by the announcement from the FOMC with a hawkish pause with a run to the upside. So what happened today is that we got another hawkish pause, and they are likely to continue another 25 bips come maybe November. So we're gonna have to keep an eye over what happens with price action. But the last time that we got a hawkish pause, we definitely got a correction. We had an upside coming in on the following day. So I'm not trying to say that this is going to go to the upside here. Especially based off of just one iteration, right? It's not the best idea to guess that we're going to get an upside based on just one. But it's interesting for us to observe and for us to prepare ourselves in the event to where it does happen, right? So what I can say is that there is still an ascending channel of which we're riding in right now, which poses a little bit of a threat here to the long bias, right? So like I said before, I'm actually hedged, right? So I actually have both puts and calls hedging against each other, right? So just in case there's a downside, I have an insurance policy for that, right? So in this case, this would be suggesting a continuation here to around the area of $4.30. I already spoke about this target. It's not a brand new thing, right? So there is actually a couple targets above this that are showing some particular interest, at least peeking out, to me. So let's go ahead and move on to that next topic, right? So in this case, this target here of around $4.60 being the 50% of returns from our previous range is highlighted to me. Also, the top side of this range here from June 27th, 2023. So this area here is pretty important to me. And I'm wondering if price action is trying to inch towards that 460. So if that's the case, then there could be a slight what we're talking about is, a slight reclaim of the inside of this formation before a continuation to the upside. I mean, know that this is I haven't back tested what I'm talking about here. That is highly I'm stating that in full discretion here, right? Just to observe how price action goes based on, my previous experience and pairing it with today's current price action, right? So I just want to let you know that this does have some. It does have a little bit of a signal here that would suggest that downside. So as you can see, the buy hourly time frame looks like a dead cat, right? So let's go ahead and take a quick little measurement here, right? So you take a trend line from the bottom side of the cat to the top side, and then you apply this to the breakdown, right? And that would suggest a target of around $4, and guess what? $4.30. So $4.30 sounds familiar because we just spoke about that target. We just touched on the possibility of touching that $4.30 bottom from this area here, right? So if that's the case, then that may be it, right? But regardless of the fact, we can see that there is a present formation, or there is a present trend happening, right? So I guess we would just have to be reactive for that, right? There is a particular area back here, the highs of, what date was this? June 27th, 2023, which are $4.35. It's matching very well with the bottom side of the channel too. Okay, so that has some rhyming too. Remember that there is the off chance to where we never face the downside at all, right? But we have to observe this because this is what the current sentiment is actually suggesting, right? I mean, we have to put it down like that. And yeah, $4.30 here is also sharing the bottom side of this triangle, right? So lots of confluence there. Okay, so I want to go ahead and introduce you to something here, and because a lot of people don't really know that I can do this, right? So this is one of my HFTs. This is one of my high frequency trading systems. Similar to what big money, like hedge funds, institutions. This is a proprietary algorithm for extracting from the market. This particular model is called the footprint model. This is the pair of volatility versus momentum, and I have several other parameters that are built into the script, right? So in this case, I wanted to show you the last trade that it actually performed. So the last trade that it performed was right, and you know what? We can actually see this, right? So we're going to get back into the result here, but I want to just show you this real fast. Okay, so it says right here, this is the buy order, and it shows you the little blue triangle showing you exactly where it entered, right? So this is telling you that it entered right at $3.13, and we hit a 3% drawdown trailing stop right at about $7.96, which, by the way, is just a cent shy of the top side that we faced, $7.97. Okay, so this system is highly efficient, and I don't see a buy signal just yet. But remember that I am looking at this on the quarterly chart, right? So let's go ahead and take a look at that last trade. So here's the last trade, entry at 313, exit at 796. This is the profit margin that it got, and this is the drawdown that it faced because of the trailing stop loss. So I just want to show, I guess I just wanted to introduce this, right? Because not a lot of people, I guess, believe that I have this, right? But yeah, this is, I guess I can show you a little bit of the script here, right? It would be this right over here. There you go. So this is my, this is my proprietary algorithm, and you can see here that it says property of ARCa Bulls systems. This was an inspiration by Crown Crypto himself. He was him and the caretaker are the ones that introduced the BBWP indicator, and that linear volatility read has been absolutely an essential part of the system here, right? So yeah, this is one of my systems, right, that I use for high frequency trading, right? So it has its own risk management. It has its own buy orders, conditions, criteria for exit, for entry. It has the entire thing built in. So aside from this algorithm, what I wanted to share with you were actually these, I guess we can call them some time fractals, right? There is a relation here. There is some type of rhyming going on. So from this top side, which was the bi-monthly starting on April 2015, 824 days later, we had the next top side, right? So there's a perfect regression happening here. And from this, starting from the July, these are the quarters, right? So now we ended up getting another read here of about 728 days. It was very close to this here, right? To the next major top side. And we kind of tightened up in time, but that actually makes sense because as price action goes higher, frequency gets tighter, right? So in this case, we ended up meeting the very top side of $17 within the span of about 553 days. Know that there are 252 trading days in the year. So I'm wondering, what's curious to me is that this is January here. So this is the start of an entirely new a new segment. So would that be the start of the restarting of the structures here, meaning that we have 910 days to face the next top side? Speculation here. This is just speculation. So that would suggest that this candle would be responsible for the next upside. I don't know, but frankly, I can also doubt it too. But it's because we have 8 days and 20 hours to close this quarterly candle, right? So, but if it were to make its upside, it has a very curious target for us to evaluate. The very top side of this candle here would lead to a target of around $17. And it just so happens that our $17 is the all-time high from this asset met at the regression. Right, so I wanted to show you this, right, because this has speculation, right? So, and also it does have a very curious time relation. Okay, so let's go ahead and now move on to the next topic here and see what else we have in store for you, right? Because I think we've already kind of gotten close to this, to the end over here. So, okay, check it out. It is 5:30 p.m. Pacific time. The after hours already closed. And we closed at $5.05. So 5 cents upside of the $5 mark. And let's see, the bottom side of the Bollinger Bands here in the hourly time frame are suggesting around 490. But I assume that as we start to expand this into really larger time frames, then we start getting closer to the targets that we wanted, right? So 3-hour time frame has the bottom side located at 483. Let's see the 4-hour time frame. That may be a little too far, but still we can. All right. Oh my goodness. Check that out. 4-hour time frame, $4.33, ringing again. All right. So I'm not sure that we're going to go there. Remember that I said that there's a chance here that we can just not do that at all and then just continue to the downside. But that 430, remember, we already spoke about it, is very particular because of this, because of the dead cat, right? And also because of X and Y reasons that we already spoke about. So here you go. That's that dead cat target. So again, I think that there is a point of interest at 430. I think there's a point of interest at 460 to 465 around there. And all of that is going to lead to a mean reversion. And that mean reversion starting on the 4-hour is located at about $6. And that's mathematically what tends to happen. All right. So another thing to kind of give us that bottom side target is the simple fact that we broke out of this descending broadening wedge. And I know that we've tested it a couple times here, right? But this could be the first actual test of the, actually just like this one here, right? That we got a test of that regression line and then bounced. So that test is actually leading to a target of about $4.65, right? So lots of things are rhyming within this target, 430 to 465, and with many different strategies, formation, statistics, geometrics, lots of things kind of leading towards that, right? So now, what I would like to point out though is that it would be okay for us to drop down even to that 465 level, seeing that the knot 236 is located right at about 453, right? So that would essentially work as a support alongside the regression line, right? So if we do get a nice little bounce there, then we could actually start using the golden pocket for a potential bounce. All speculation. There's no back test to that. Okay, so I want you to make sure that that is still imprinted into your thoughts. Okay, so now the 30-minute time frame RSI, looking to find a bounce here And this would be the determining factor here as to how far we can go, right? But if I were to be very honest with you, I'm not looking for the support grab here from the 30-minute. I'm looking for the support from the higher term time frames. So, and it's still within the biweekly realm, right? So this is what we speculated on the last time. We would say that we would face a downside here and potentially get that support from the SMA 14 and the gravitational zone for a bounce to the upside, which this tends to give some credibility or some validity to the downside that we're looking for, right? So I don't have any control over what someone's pocket can do, right? So if someone just decides to get longs, freaking 700,000 shares out of nowhere, then yeah, price action is going to reflect that. But there's no way I can know when that's going to happen, right? So somebody could just get the itch real quick, and then this thing will rocket ship to the upside. Anything that I said here would be entirely invalidated. Now, for the last part, the manipulation. Congratulations if you are here at this point. And I know that this is the key topic here because this manipulation signal was something that we observed live on the 30-second intervals, which is very curious. So we got that shot here, and we started, and just to put it out into simple terms, when you are a subscriber of the ARQ indicators, you will receive this indicator too. The very one that everyone speaks about, right? That it's able to locate manipulation in the markets. You will receive this, and you will receive also a PDF with the indicators. So the indicators will instruct here that whenever we see an X, there is usually an upside pump followed by a crash in the market. And that is exactly what happened here. So 30-minute time frame fired off right at about $5.33. Price action ended up going to around $5.42, followed by an entire dump, right? So we were able to see what that downside target was going to be anyway, because this is a dead cat, right? So we measured the top side of the, so you fall, you capitulate, you create this little bounce, creating like a dead cat, right? Or a scared cat. I don't know why it's called dead, but yeah, I guess it's because of the bounce, I guess, right? The downside. So we were able to measure, from the top side of the wick here to the very bottom side of that dead cat, and we applied it to the literally right underneath this this support line, and that gave us a target of $5.10. Now, observing price action right over here, it looks like we touched and bounced right off of that 510. We got the upside signal here, and just as we explained live, they manipulated. And yet again, took it to the downside. The reason why they would manipulate is because this strategy is done, right? So meaning that you get the price objective, and then when that price objective meets, there's usually a continuation to the upside. You end up catching the resistance level somewhere up here. You validate the newly converted resistance into support, and then you continue. So they, of course, they know that something like that would happen, right? So they just quick little manipulation signal here, and then bam, you drop it all the way down to $5. We're barcoded for some time. It looks like not a lot of the bulls are wanting to let go of that $5 target, right? But it's still up in the air. Remember that we already know what those downside targets are looking like. They do have a higher probability for now, right? But we also have to observe the statistics based on retracements using the pair of the FOMC versus the quad witching or triple witching. So the stats are still in play. I would say for us to kind of relax and just observe what's happening here. Make sure that, here's something that just is not financial advice. I'm talking about my paper traders here, okay? Trading panel. You go to the trading panel, right? You hit that paper trading here and you connect it, right? So this is what we're talking. This is what we're talking about here, okay? So we want to protect retail. What I was going to say is that if you are starting to face a continuation to the downside, in my personal opinion here, I'm not averaging down. I'm not buying more. In fact, I'm gonna release the gas, right? So if I'm if I'm feeling that I'm on a downhill in my really fast car and I'm still at the same pressure on the throttle that I was going up the hill, so if I still have that same pressure of throttle going down the hill, you're gonna speed up naturally, right? So your car is gonna go even faster, twice the speed, than what it was while inclining, right? So if you are going on a downhill and you still have that same amount of pressure, onto the gas, then you're probably going to want to pull away, right? Pull back from that gas so that you don't speed up and continue speeding up. So that concept of gravity is the same exact thing here in price, right? So if you're still heading towards the downside, you want to let go of that gas and make sure that you can slow the rate of loss down, right? Because if you hit the gas even harder, you're gonna increase the rate of loss downward, right? So if you hit the gas yet again when it reaches another level, you're gonna just go even faster to the downside, thus making the mathematics entirely impossible to recover. So in my case, if I'm noticing here that we're going to break that $5 level, we release some of the long position here, maybe a good 35% of the position, right? We'll slow the rate of loss by 35%. And then you can add that 35% later on, right? The same 35% that you recovered here was going to be the 35% that you would already lose anyway, right? So please remember that I'm speaking about paper trading here, right? So make sure to go and click on the link below in the description and sign up for TradingView if you would like to trade like ARCa, right? So that would help my trading future out greatly. I must be honest, okay? And if you are interested in acquiring any of these indicators, please go ahead and get in touch with us at arqindicators@gmail.com. But I think this is a pretty good place to leave off here. You know the targets, you know the plan. Let's go ahead and see what else can be happening, okay, team? Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 forever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, very good night, and I will catch you at the bell mañana. Audio. Yeah.